With all the talk today about the housing market and constantly changing mortgage interest rates, a common potential question from home buyers is, does it make sense to buy right now, or did I miss my window? Should I be saving for a house or paying off my credit card debt or student loans or any other debts I might have? Well, today we're here to answer all of those questions. Welcome to the Fairway Mid-Atlantic Region YouTube channel. My name is Sarah Rubin and I'm our licensed regional marketing director. If you're new here, we'd absolutely love for you to hit that subscribe button right down below so you never miss another video from us again. Our goal is to give you the tools you need to start your journey towards home ownership. We post new videos every other Friday, all about the home buying process, the real estate and mortgage industries, personal finance, our local communities, and so much more. Okay, let's jump into it. When it comes to buying a house, paying down what we call consumer debt should always be a priority. But why? There are several reasons that paying down your consumer debt is incredibly important. First, your credit scores are weighted heavily on credit utilization. If you are using more than 30% of your credit limits, your credit scores will be negatively impacted. Using more than 50% has an even greater negative impact. Also, credit card debt tends to have higher interest rates, so you do not want to put it off for long because that will just cost you more money in the long run. Paying your minimum payment each month is an absolute must, but paying off as much debt as you can will go a long way in helping you increase your credit score, therefore leading to a more beneficial mortgage payment in the long run. As for student loan debt, it is certainly something you want to pay off, but it is not as important as paying off credit card debt for the following reasons. Typically, it has a lower interest rate, lower payments, and also has fixed payments that have a definitive end date or term. At the time we're recording this video, student loans are also being deferred. So if you're debating what to pay off in terms of priority, credit cards and other loans definitely come first. But that doesn't mean that when it's time to pay those student loans off, you should stop or let them go. We have a video all about credit and the home buying process that we will pop a card to right here. The most important thing to understand is that the better your credit score, the more favorable your final mortgage loan may be. Lenders operate on a risk-based system and evaluate your reliability as a borrower based on your entire credit picture. Saving for a home is also very important, but it is important to note that you may not need as much money saved for a down payment as you think. First-time homebuyers can finance up to 97% in many cases, and sometimes even more, depending on your specific situation. While your preconceived notions of how much you'll be needing to pay for your down payment can be lessened, it is still no small amount of money, so please do not think we're diminishing that. Closing costs, as we have gone over in many previous videos, can range anywhere from 3 to 6% of the final loan amount. Add that to your down payment, and of course you can expect to pay thousands of dollars up front to buy your home. But it may be less money than you had been originally anticipating or thinking you needed, and that was what was holding you back into really entering the home buying market. The bottom line is you do not have to pay off all of your debt to qualify for a mortgage, and you can save money for a down payment and reduce your debt while increasing your credit score all at the same time. Now that is an ideal situation. So what's the best option? The honest truth here is there isn't a correct answer. Buying a home is an extremely personal and large decision to make. If you're considering paying off your loans or buying a home, one of the most important questions you can ask yourself is, what are my goals for the future? And what path makes the most sense for me to get there? Paying off debt can be a daunting undertaking depending on your specific situation. Should you decide to buy a home, you must understand that you are adding a huge chunk of financial responsibility to your plate. On the other hand, buying a home adds a list of many other responsibilities you may have never thought about. So really take time to weigh your options and decide what is best for you. It is so important to understand the benefits of both options. Paying off debt can lift a pressure off your shoulders you may not have even realized was there, and give you a real sense of financial security that perhaps you've been looking for. On the other hand, buying a home is one of the largest financial decisions you will ever make, and is an accomplishment to really feel proud of. In addition to that, becoming a homeowner helps you build equity that can be used in the long run for various things. So don't discount one option or the other. No choice that you make is the wrong choice. It's just a personal one for you. So again, the answer, it's just not black and white. It's extremely gray, and you have to decide what makes the most sense for your life in the long run. If you are ready to start the home buying process or want to learn more, head to our website at fairwaymidatlantic.com today and contact one of our loan officers. They are more than happy to share their expert opinion, help you create a plan that works best for you, and give you the tools to start down the right path. Thank you so much for tuning in today, and I look forward to talking to you soon.